All right, and we are live. It is 8:04, almost 8:05, Saturday morning, 8:05 Eastern Standard Time, and we are going to have one heck of a conversation today. For those of you who are just joining on the restream, as you know, we take just a couple minutes just to let people bounce into the room. Got some amazing topics to discuss today. Just need to do a few technical things just to make sure that we're solid. Looks like we got Gaming Crypto just bounced in over here, which is awesome. Let me pop out the chat so we can monitor the chat. I know when you come back on the restream, the chat is available so you can watch the chat as it flows by. Not always as engaging when you're watching on the replay, but it's good to be there. So we've got that up. Morning, how's it going? Hopefully you got some coffee, you got your espresso, got your Bloody Mary, screwdriver, whatever it might be that you drink early morning. So I'm gonna start with a little bit of espresso. Had the coffee ground. Had the dog out for a long walk earlier. We've got some great things to go through. So coffee's good. Coffee is definitely a good idea. Not something. It's weird too. Morning. Normally I'm drinking a pre-workout, so then a workout, and then I'll have just a little bit of espresso afterwards. Something about having espresso first thing in the morning, though. Just it always seems to be a little bit needed. So anyhow, let us start digging into some info here. There's always good news. There's always bad news. that's been my experience, and it's always good to focus in on good news, but sometimes it's always good to understand where the bad news is coming from. So what's up, Black Panther? Glad to have you on. So awesome. Let's see, going with you to get some coffee. Awesome. Very cool. Very cool. So all right, let's some people in the XRP community are beaten. Man, I think part of it, and it's hard to say this, but if you've been invested before, if you've suffered gains and losses, you've had your ups and downs, I think it might be a little bit easier to focus in on longer term strategy. Sometimes, what's up, Mr. B? Glad you made it on, man. But sometimes it's hard to stay focused. Sometimes it's very easy to be swayed by people getting weak. It's easy to get swayed by all the FUD. It's easy to be swayed by negativity. It's so much harder to stay focused. It's so much harder also, to go into investing in anything. It doesn't matter, whether or not it's digital asset or stock or what have you. But at the first sign of trouble, to bail. People, you put your money in, you kind of have to forget about it, like it doesn't exist if you're going in long-term strategy, especially if it's a speculative investment. But the fundamentals are there. It's solid. So and like Grayman is saying, XRP is a long-term play. And you're right, nothing has changed at all. Nothing. Zero. Digital assets been around since 2010. If you look at the long game and you look at those initial years on what it took even for Bitcoin, to move from its early stages. But even if we look at XRP, and again, we have to look at the long game. We can't look at things in a vacuum. That's why even from a political sense, an economic sense, you can never look at anything in a vacuum. So if I look at the geopolitics, and you look around the world and you want to look in a vacuum and just capture one event, there's so much more than that one event. There's so much more history. And you have to go further back than 5 years. You have to go further back than 10 years. When it comes to history and geopolitics, sometimes you have to go back tens of years, if not to the beginning of an event. You have to look for causation, and you have to put all the pieces together. When it comes to investing, it's not that different in terms of, we have to look at the bigger picture. There's no such thing as a get rich quick scheme. Anything that promises get rich quick is going to end really, really badly. Now, you could be very, very confident in an investment, and it's happened multiple times in stock, but it's not always on your side, and it doesn't always happen in the time frame that you anticipate it happening. Now, from my perspective, it's very difficult also to apply any form of true technical analysis. And I'm not a technical analysis expert by any means, but when I was investing kind of, and I wouldn't say daily, I wouldn't call it day trading, but when I was trading stock, I went into it with a strategy. Now, strategy is important, whether it's, again, digital asset, stock, or whatever you do in life, having a solid strategy. If you don't have a strategy in play, or, your strategy with digital assets could be, look, I'm putting this money in and I'm okay putting that money in. I'm holding it over, it's a long-term, play. It's 5 years from now, 10 years from now, and then that's it. If it's amazing, it's amazing. If it is mediocre, then that's what's going to happen. But the thing is, you have to go in there with some sort of a strategy in mind, and you have to be willing to move as well. So the thing is, if you go into any form of investing with emotions, the emotions are always going to get the better of you, and it's so difficult. I can remember, trading, and you put your money in, and you're like, oh my God, that stock is going down. If it keeps going down, I'm going to lose all this money, and now I got to get out. Then you bail out because of the market is turning, and all the FUD in the media against whatever it is that you're invested in, and so it becomes very detrimental overall. It's a mind game. And unfortunately, the big financial institutions are really good at playing that mind game, especially when they're broadcasting that out to the mainstream media. And and so there is definitely stock manipulation and things like that are taking place, but there's a level of where they're taking advantage of those that are invested as well. And so you have to get very focused, when you're investing in this market space, and I like that. I agree with what Gray Man is saying. That TA doesn't really work with crypto. And in the beginning, when I first got in, I tried to apply some of my stock investing strategies. But part of my stock investing strategy was also, I used a theory called the Rubberband Theory, which was looking for stocks. They had to meet specific criteria. And I put everything into a spreadsheet, and I was using a stock finding program based on this criteria. And so you're looking for the Rubberband Theory as the stock that is stretched so far to where it's at a point where it's oversold. And it didn't always pan out immediately, and sometimes you're going to lose, but you have to take your wins and your losses and you average them out for an overall win if you have the right strategy. And so so that worked in stocks, but there's specific fundamentals that go along with that stock that are related to the company, what the company position is, what the company, what the risk analysis is on that specific company. So there's economics involved in financials, and you're right. And that's where my issue, and again, I'm no expert on this, so I could be completely off base, but I look at the digital asset space. We're not investing in stocks. There are no real fundamentals within the stock other than speculation and in anticipation. And we're looking for growth and utility. But how does that factor into TA? A good part of, and so we're going to go over that. But a good part of the, of the TA then, or a good part of, TA also has to do with monitoring what the emotional buy and sell is. So you can look at that part and you can kind of get a gauge of what the market is doing with an expectation, but it's super high risk. And the space, like Grayman said, is super young. There's still so much more that needs to get into it. And these so-called experts, I don't think anybody really knows, because there's too many variables that are involved. And so if you look at the variable of regulation, Andrew Davis just brought up regulation, and there's still an open question as to whether or not the government is going to identify it as a security or not, or we're really focused in on trying to determine whether or not this digital asset is going to be used in full utility. Let's look at XRP, for instance. We anticipate the direction that XRP is going to go in, primarily because of what it was designed for. We know what it was designed for. We know it's an amazing solution. We know companies are using it or are attempting to build it in for utility. We know that Ripple with RippleNet has that solution. XRapid as a part of the RippleNet platform, and it's a very critical component of RippleNet. And once it's fully rolled out, it's going to provide the game-changing component. There's still some aspects we don't know, and we don't know if it's being fully implemented, or what stage banks might be in integrating or not. It's really hard to say, other than what we can read in the media, unless you're able to talk to somebody on the inside. And everybody, I'm positive, has signed NDAs on everything. So there's just too much. And now we know that R3 put XRP as the digital asset within their Corda platform solution. And then, there's just so much more. The utility stage of digital asset is just in its infancy. We're just identifying now, but things are amazing because we're beginning to see, bigger and bigger use cases of digital asset. And whether it's using the Ethereum platform or whatever it might be, we're identifying that the use case is solid. We're identifying that it actually does what it's supposed to do. Last week I talked about they were using it for a supply chain, moving freight ships from where was it? Now I can't remember where it's from. Was it the Netherlands to Korea or wherever the ship was going? And they tracked every aspect of this container ship. Instead of doing it via paperwork, they did it via the blockchain, and it was super impactful because it actually did what it was supposed to do: cut down paper to zero. They said normally there's reams and reams of paper, and it passes through so many people's hands to where it doesn't just slow down the process, but creates potential problems within the space. So utility is definitely here. And that's the exciting part, and that's where we are all the expectation now is for blockchain to move to the next level, for digital assets to be integrated at a much higher level. So those are just some thoughts on that. Let me look here. There were some great comments here. Flooring guy, guys, don't expect much. This is sickening. All the hype from YouTube and Twitter. Stay calm, be patient, time will come. Nobody knows. All we need to do is focus. XRP is if that is the one digital asset that has an amazing potential when it comes to the economics, and we already know that that's the primary emphasis and focus. So Grayman, the nicest possible way. Ripple don't care about us, and nor should they. They focus on the bigger picture. That's it. Ripple doesn't, they're not, focused on community opinion as to what they should or should not do. They're not going to look at community opinion based on timeline. They're busy running a company, and they've been running this company since 2012, even before that. If you look at the history. And so their goal is definitely a long-term strategy, and it doesn't happen overnight. And that's what we all have to really, remember, is that in a space like this, as much as we want the banks to embrace, or we want financial institutions to embrace, and we want to see the change come about, from their perspective, you don't just automatically move from the SWIFT protocol that you've been using for 30, 40 years, and then all of a sudden say, all right, now we're going to move to RippleNet, and we're just moving everything over tomorrow. Don't worry about any issues. We're not 100% prepared, but we're just going to flip the switch. It doesn't work that way. You're talking about banks that, again, have been utilizing a solution, and banks are very slow movers. They're very conservative because of the responsibility that they have from a financial economic perspective to their clientele. Yes, they can identify that there's a better solution out there, but again, making that migration, the training process, the conversion process, just the whole switch over doesn't happen overnight, but it is possible to test it out in small incubators within the bank system as they get ready, or in a sandbox or whatever it might be. That's definitely a possibility. So we got to figure all of that out. And you know, just to the last point on this also, you know, Flooring Guy says, you know, completely agree with you. You should talk to others about it. People hyped up, expect a lot, then sell and disappointed. You know what? That's the nature of the game. You know, is that people are gonna their expectations are too high. They let their emotions get the better of them. You know, when it comes to investing, and again, it doesn't matter whether it's a digital asset space or a stock. You see it all the time. You know, people they invest, and it's an emotional roller coaster if you've ever traded stocks, and it's very, you know, it definitely is difficult. And even with a best laid plan, you know, I know in the beginning, you know, I would go through and say, oh, I know what my plan is, I know what my out is, you know, but your emotion when you see that initial rise, you're like, oh, maybe I should take my profit now and back out. You're never looking for the high. You're never trying to get in at the low, but there's certain, you know, obvious points of entry and exit, you know, and if you sway against what your strategy was, it's gonna backfire, and that's the emotional aspect. Here it's a little bit different. You know, people are just emotional in general because we're looking for, I like that, the fast food, you know, mentality. We want that immediate justification, and I think that's what is extremely burdening and overwhelming for people, you know, is that you're putting this money in with an expectation of immediate return, and it doesn't work that way, you know. So hey, say what's up to everybody at the Honda Service Center for us, Michael. Maybe you can put it on the TV in the waiting room. What's up, Carl Lewis? All right, so you got your coffee. Gaming Crypto is ready to go, and as we did get this set up, Adam Heslop, what's up, man? Good to see you on here. So what we're gonna do, let me get this started now. List here. I'm gonna start changing this up because I keep getting the same first people bouncing into the room. But we're gonna do this today. Let me see here. All right, we are sending some free crypto over to who's it going to? It's going to Gaming Crypto, and I gotta make sure I send it to the right one. It didn't add you as a friend here. Hang on a second. Hang on. Here we go. Let's see. Gaming Crypto. Gaming Crypto XRP, right? Gaming Crypto XRP. Just confirm that is yours before I send that over. Gaming Crypto XRP. This is, you know what, guys, you know, it's amazing to me because, you know, I appreciate, you know, the little things, you know, people throw over, you know, some, here, hang on a second. Gaming Crypto XRP. All right, let me confirm that. Bam, I got to add you in. All right, there you go. Sent you over some free XRP. And so, you know, I like, you know, I think it's important. Oh, I shut this thing off. I'm trying to monitor my stream and I shut it down. All right. So, you know, I think it's important. You know, I really appreciate everybody, you know, taking their time, coming on, you know, spending time and, you know, and also, you know, giving input, you know, to the stream. I think it's really important, you know, and so it's always fun to give back, you know, to the community. And so that's my way of giving back to the community is to throw over, you know, some free XRP, you know, when we do streams. So I think I like that. So, and people have been, you know, throwing over super chat tips and XRP tips. Not a huge amount, but it's awesome, you know, because I like giving it back. so it's a lot of fun. Michael Metzner, let's see. Good to be among people who understand wealth. Doesn't happen overnight. Those seeking immediate wealth do not serve the XRP space very well. No, and you know, and there's, you know, there's just too much fundamental, you know, that goes on behind it. And again, you know, I think part of then I think it helps all of us, you know. So yeah, especially within this space, you know, those that are out there preaching get rich quick. That was one of my biggest issues, I'll tell you, with BitTrue. And I registered for that exchange. I never put anything on that exchange, mainly because, you know, they were doing, it seems like they were going above and beyond, like they were doing too much to attract people by promising, you know, all of these, you know, free airdrops and, you know, and free digital asset. And I could be wrong. I look at the BitTrue platform. The BitTrue platform is almost identical to the Binance platform. If you look at the two of them, the two apps, they're almost identical. I thought that was kind of interesting. I was looking at them again yesterday. I was looking at BitTrue because, BTR, it seems to be making some move. And, it kind of kills me, if you look back at some of the, what you could have done, and Binance in the early days when they launched their BNR, I think, is it BNR or I forget what their token is. But I didn't get any. And then I was going to get in again when it was at 6. And so now it's at like 39. What's up, Sin City? Yeah, so that's it, man. I'm not 100%, convinced that BitTrue is a good exchange. Some of these micro exchanges that pop up, BitTrue could end up being a huge exchange, but they were just doing too much to drive people over to them, and Binance is doing a great job on their end. Obviously there's some changes that we're going to see from a global perspective when it comes to these exchanges and regulations also. They're trying to copy the format. Yeah, so they want to copy the format. Good point, Gaming Crypto. Binance definitely has an amazing platform. When you get into it, in terms of what you can do with it. I think it was built very, very well. So all right, so check this out. I'm digging around and I thought this was interesting, because when it comes to the general economy, we want to look at regulation, with some stronger voices that are trying to ban digital asset investment vehicles like derivatives. And I can understand that that's kind of a scary place to go with digital assets. It's definitely more casino-like. But again, who is it? Why is it that the government thinks that they're, smarter or more important than the individuals that are investing? And why are they holding on to the same FUD that has been spread and the same misinformation that's being spread by many others within the financial institution? So what I want to do, let me go through this first because I thought it was really interesting, point by point. Then we're going to come back. I want to talk a little bit about France issuing bonds with negative interest rates. I think that is telling about the direction of the European economy right now with the euro and everything else, that we're going to see a fragmentation of the euro in the near future, whatever that might be. Near future, or let's call it the future. And this is interesting too, because I can remember, years and years ago, sitting there, and I happened to meet up with a friend of mine. I haven't seen him in I don't know, 20 plus years. Ran into him once in Niagara Falls. He lives overseas. But anyhow, so yeah, he happened to be in this area, and we met up for coffee, and we're talking about the euro, and we're talking about what's happening over there. And I brought to light what's happening within the digital asset space, and he didn't know the digital asset space very well. But what was interesting is that years ago, I can remember in high school, there was a group, we'd sit and talk, and it was interesting just because it was a group of people from different parts of the world, and we talk about the economics or economy. And it's kind of strange, I think about it now in high school, to be able to be kind of astute like that and have that kind of conversation. But this is pre-Euro, and we talk about the upcoming Euro, the ramification of what that'll be for Europe, for the world economy, and then also what the potential for the Euro is for fragmenting after the fact, whether it be successful or not, whether it will be positive or negative. And our outcome was that it was going to be negative for Europe, and that eventually it would fragment, that it wouldn't last. And as I was talking to my friend a couple weeks ago, we got together, and I said, this is kind of funny, because here we are all these years later. That's what we had talked about then. Here it did implement. Here's all the issues, and now it's fragmenting. I was like, we're stupid high school kids at the time. What did we know from economics? I had one economics class. Is just using being astute, being overseas or whatever it might have been. I don't know. But it was just funny, and I said, here's all these financial wizards and experts, and really they weren't, or they aren't, and it's mind-boggling. And now, you look at what's going on in Europe, and you look at what's going on in France with these negative interest rates. So we're going to talk a little bit about that after. I also want to get into regulation, because there's definitely some things that are happening from a regulatory perspective right now. And from the regulatory perspective, what's the SEC doing to start tracking blockchain data? What are they proposing? And I think that that's also very important. It looks like we're about 30 minutes in, and I'm finally getting to the topic at hand. So for those of you joining in, we're going to get to regulation. We're going to get to talking about the impact of the negative interest rate bond that they're issuing in France. And then we'll dig down. But I want to go through FUD first. And I want to see, what you guys, what your thoughts are on the FUD that's being spread by, and has been spread. And it's interesting, again, because it's a common theme with the same exact message over and over and over again coming from these guys. So it looks like I'm trying to see here. Oh no, that popped up. Okay, I thought we had I thought my chat box on my phone was slowing down. Yesterday was really weird. My chat boxes were getting mixed up. I was watching DNI, then I bounced into Aiden's room for a second, came back to DNI, and Aiden's stream was still in when I was looking at DNI's stream. It was really weird. But just a quick break. For those of you, yeah, that's so funny. That's exactly what I was about to say, Car. That's hilarious. I was going to say, hit the likes. We've got 26 people watching on an early morning. I appreciate you guys for waking up early to bounce in and listen to us, listen to me talk about regulation and all this mind-numbing things that we enjoy to talk about. So hopefully you guys are staying very caffeinated. But yeah, if you guys are new to the channel, anyone listening, hit the subscribe. If you want to make sure you get notified anytime I put up a video or go live, hit the notifier bell. Put up some thumbs up. Best time to watch. Yeah, I love, early morning's the best. Definitely the best. So some thumbs up on the video if you haven't done so already. And that's it. So appreciate you guys. Now, let's get into some FUD, because I think this is interesting. I want to start with where we were. Where's this article? Here we go. I want to start with the FCA, because this is, oh, look at that. That's really cool. All my highlights that I put in here are still here. Oh, that's really cool. So I want to start with what they said, what the UK was saying based on digital asset. And then we're going to go backtrack and we're going to go through everything else. So this was from last stream I brought this up, but this was this is a UK market regulator. Again, so if you guys weren't on the last stream, just a summary. It's a UK market regulator proposing a ban on financial instruments linked to digital currencies like Bitcoin. So this happened in the UK. Now, it's interesting and it's important for us to stay in tune with what's happening in Canada, in the UK, in Australia, in other parts of Europe, whatever it might be. It's important that we see the direction of what's happening with digital assets, not just what's happening here in the US. And I'm not sure if, where all you guys are chiming in from this morning. And I'm sure there's some people from overseas as well. So now what I thought was interesting, and this is the statement that I wanted to focus on, because we're going to then go through other statements from others within the space. Carl Lewis, that's right, man. You're in Australia, an Aussie over here. So fantastic. So what we have here is, let's see, the FCA. Okay, so crypto assets are ill-suited to small investors, right? And then they said extreme volatility, the difficulty in valuing them for consumers. Now, their focus here, the government saying that people don't know enough by themselves, so the government needs to step in and protect them, right? Again, it cited their extreme volatility, talking about these derivatives, or ETNs, they refer to them, exchange traded notes. Extreme volatility, the difficulty in valuing them, consumers, patchy understanding of what they're buying, and the increased risk of financial crime. So Gaming crypto. It's good. So I think that that's interesting. This undermining the intelligence of the people of Main Street, of all of us, of anybody who wants to buy into this space. They're not smart enough. Like, but if you want to go to the casino, isn't that your prerogative? If you want to piss your money down the toilet in the casino, I mean, people like going to the casino. Some people are really good at gambling. Maybe they'll do a little better because they understand. They go into it with a strategy. They understand how to bet. They understand how to play cards. That whatever it might be, they have a better chance of winning. But here, it doesn't seem like the government cares about the casino, but they do care about, this side of things, and it's amazing. And then they go here, their statement here. It is therefore clear to us that these derivatives and exchange traded notes are unsuitable investments for retail consumers. So, but I was okay if you're worried about derivatives and you're worried about the casino-like investment tactics that these big financial institutions may be trying to take advantage of. I was like, okay, but then they come back and they hit harder and they go after, Bitcoin is a prime example. And then they said one of FCA's concern is the volatility in price of digital currencies, with fluctuations in value of Bitcoin proving a prime example. So again, they say, you know what? We don't think you're smart enough. And let's use Bitcoin as an example as to why we don't think we should allow people to invest in digital assets. And they just take it to the next level. And so I look at this and I say, you know what? Do these people have an ulterior motive? So initially I wanted to title this stream FUD, anti-crypto or ulterior motive. Are people really that stupid? Meaning, do they really believe that we're that stupid? That we don't see through their nonsense, because there is a higher probability chance that all of these individuals that are getting into this they do have ulterior motive. And so that's what's critical. And then the reason why I wanted to talk about the France debt is because here's a country now issuing negative interest on bonds. It's crazy. So you have to pay for the right to hold a bond. And I was reading a little bit about why Europe back in 2014 and 2016 there were other instances of negative interest rate bonds. And it's crazy. So they're okay with that for their people paying to support their debt and buying their debt, but it's not okay for people to invest in their own with their own prerogative. And I think that's definitely difficult to fathom. So they need to understand there's no cure for stupid, right? It would be a good day when that happens. So now let's start drilling down this FUD. And I think it's interesting because it kind of plays into this mindset of what the FCA over in England and you look at the Shermanator in the United States, Brad Sherman, and what they're bringing to the stage in terms of the negative implication of digital asset, and the misinformation that they're trying to spread. So hang on. So the first one, and I also think it's interesting because as we uncover this, we look and say, okay, who's involved in it? Why are they saying it? Why do they have to speak out about it? Do they really understand? Are they really knowledgeable? And this kind of goes back to what Chip and we did the stream the other night about the crypto attorney and why it was wrong, the fraud that he perpetrated, by abusing the authority of the name attorney, and went up in front of everybody, making some statement and claim that he was the authority because he's the crypto attorney. But don't worry, I'm not giving you any advice. And by the way, the advice I give you isn't coming from an attorney because he wasn't one. And basically all the information he gave was incorrect and just regurgitated from things that he saw. No opinion on the matter whatsoever, but making ridiculous statements and claims of knowledge and insider information and all of that. But there's a certain authority that people in specific positions of, let's call it position of power, do wield, because people look to them. It's like an actor or actress coming out right now in favor or against a digital asset, whether they understand it or not, economic or political, because people are going to follow them and listen strictly based on the name. So this first article that we pull up let me see, where did it show up? This was on the what the hell is that? Bitcoin. Bitcoin exchange guide.com. So anyhow, Bitcoin exchange guide.com, and the title of the article: Crypto crap is not compliant and is for drug dealers. And this was the Shark Tank investor Kevin O'Leary. Now, I forget who posted this up. I think someone posted up on Twitter. And I thought it was interesting because, just the statements, cryptocurrency is crap and non-compliant. What does he know about cryptocurrency? What does he know about digital asset? He has a level of authority, a position of power. The guy has done some amazing things with his life, but just because he's done some other amazing things with his life doesn't necessarily mean that he understands digital assets or cryptocurrency. So that is, to me, really, really difficult to fathom, that you have a guy like this, again, abusing the authority of his name to spread misinformation that he doesn't really understand. Now, he says here, let's dig in here. If I want to be compliant and I don't want to breach any regulators because I'm a participant in financial service globally, this is his quote, and that is where the majority of the money is, I need to be compliant. I have no interest in doing any of this crypto crap because it's not compliant and regulators in all countries do not agree. Okay, that's true to a point where we're still waiting on regulation. There's definitely some issue there. Then he goes on, all of this non-compliant stuff, I don't want to get involved with a drug dealer trading Bitcoin somewhere. I want nothing to do with that. So the point here is that he's holding on to some old misconception here about what Bitcoin is being used for, and then here he is continuing to spread that misinformation, and so he's spreading misinformation based on something that he doesn't necessarily understand, and trying to hold on to that, so Jay Vaught, let's see, never understand why they think they have the right when they don't. Exactly. That's exactly it, So I'm assuming that has to do with government and whatnot. Yo, XRP Minute, the founder, all the way from Santiago, Chile. Just want to know, maybe we'll get a chance here and get some input from the XRP Minute on what he thinks about the new upcoming Yeti coin, because the Yeti coin, in my opinion, is seems to be pretty exciting, Chip. So, all right. So let's move on from Kevin O'Leary. Kevin O'Leary, and then we're gonna drill down here. I just want to go through a little bit of FUD from all of our friends here. So the next one, Jamie Dimon, and this goes back to 2018. And you gotta love, again, position of power. And these are just to remember, some of the great things that these people said. I don't really give a shit about Bitcoin. How about that one? Ulterior motive? I would say so. In 2014, he said Bitcoin was a terrible store of value. Then a year later, he said it wouldn't survive. And then in 2017, I'm just reading through this article on MarketWatch. 2017, he said that Bitcoin was a fraud. And he just went on and on and on. And you remember he kept doubling down on his nonsense, and it just kept going on and on. And then he finally, based on, I think he started coming around recently, where he's finally realizing, what's actually happening within this space. But the ulterior motive for him is that A, he doesn't understand it, and B, it in direct opposition to some of the things that he believes in and does in terms of lack of transparency. And so, from a banking perspective. And then this was, let's see, Cointelegraph. This was also back in 2018. Jamie Dimon calls cryptocurrency a scam. And so this is, it keeps going. As I said, he called it a fraud, and then he calls it a scam, and he just kept drilling down and drilling down in terms of what his thought process was on on digital assets and Bitcoin. And then let's see here. Okay, and then he goes on and he calls Bitcoin a fraud. And it's crazy too, because it just, whenever there's a little bit of, change in the marketplace, they come rallying. Then here, as recently as May of this year, the Shermanator, Brad Sherman from California, calls for a crypto ban, just like the FCA is doing over in the UK. And his statement is that it threatens to diminish American power. So he obviously doesn't understand digital assets. He definitely doesn't understand American exceptionalism, and he definitely doesn't understand American power, mainly because of who he aligns himself with, mainly because of how he votes, mainly because of his political ideology. He doesn't believe in that stuff. So it's nonsense when he comes out and tries to outlaw cryptocurrency, based on American foreign policy and the rule of law. This is what he wants to rest his case on, and it's insane. The guy doesn't understand anything. But again, he's holding on to misinformation. What's his ulterior motive? Who supports him? He's talking about the diminishing of a sovereign currency. So he doesn't understand the dynamics of what's happening within the digital asset space. It's not about, at this point, replacing the US dollar. It's not about replacing the euro at this point. That's not exactly what's going to happen. And he continues, to double down on this thought process. And this was on Cointelegraph, but so they pulled out a quote here. An awful lot of our international power stems from the fact that the dollar is the standard unit of international finance and transactions. It is the announced purpose of the supporters of cryptocurrency to take that power away from us. So it's not so much taking the power as to supplement a level playing field to allow all countries to participate and members within those countries to participate in the global economy. We're talking about an explosion of economic well-being in the world. Imagine the impact of what that'll have on U.S. trade as we're able to develop more and more things in the United States. And there's more countries around the world that will develop at a faster rate because there's more money and more stability to where they want to buy and consume our goods. I would rather, see an explosion in trade and people wanting, to buy new cars. They want to buy, we bring more production back to the United States, and people want to buy more computers. They want to buy more tablets, whatever it might be. There's things that can be made in the United States as we begin to bring some of the textile industry back in the U.S. for quality control. And there's countries around the world that still and will want to and will continue to want to do business with the United States. We have countries in Latin America that have been struggling for years. You have countries in Africa in particular that have been struggling for many years and need stability of their economy. And they need to be able to trade at a global level. And that's good for everybody. But he's holding on to these, old ideas. And now, yes, there is, a lot to be said, and I 100% believe in the sovereign currency, and I do not believe in a one world government or a one world currency. I think that's fiction. That's not going to happen anytime soon. I'll never say never because who knows what could happen. But in the near future, there's things that need to be done that can be done in the United States to where we do hold, a level of power in the world. Mainly because of the status economically, politically. There's a lot of other things that go into it. We won't go into that right now, but the fact that the Shermanator is taking that approach, but we also know what's backing him up. And that's why I think it's important that we focus in on where these people are coming from. Nothing happens in a vacuum. There's a lot more to it, what his statements mean and why he's making these statements. And then he's called for the prohibition on U.S. citizens buying or mining cryptocurrencies. Could you imagine? But one of the things that I read on the last time as to why the U.S. won't be able to ban this mainly comes from our freedoms, and so there's things that the government won't be able to do, at this point. But there's enough voices within Congress that serve as a counterbalance. But again, Jamie Dimon, Kevin O'Leary, you see what the FCA did in the UK. We see what the Shermanator, is trying to do. And this guy goes on. This guy's not that intelligent. That's at the end of the day, the Shermanator is not that intelligent. Right place, right time. I don't know. I see a lot of these congressional representatives. They're not that intelligent. They just happen to be elected in an area that's easier for them to get elected in. And they just had whatever it took to go and run. But that's really it. That they don't have any additional intelligence above that. So let me look. Sorry, I totally missed out on a whole bunch of these great comments. And then we've got XRP Minute talking about the Yeti coin. What's going on with the Bigfoot and the Sasquatch, because I think all that's really important. We definitely see some great movement there between the Yeti coin and OTC, because Chip, yes, the big question out there is, are you down with OTC? And then, when are we going to start seeing airdrops of the Yeti coin? That's the big question out there. So, who believes that Warren Buffett doesn't own any digital assets? Yeah, not buying that for a minute. Yeah, I agree with that, Chip. I think that we're going to see some of that too, because Warren Buffett had some really nice statements as we went through. Let's see, Allison, it will be the case of if you can't be, then join them. Then that's exactly the direction they're moving in. They can't beat us. They're definitely going to. The Shermanator is dumber than a box of rocks. Wait, did I just install a box of rocks? Yeah. So the Shermanator. Cryptocurrencies are a crock, he said to CNBC. And this was a year ago, the Shermanator. What a joke this guy is. The guy didn't even know how to use his cell phone. He was the guy that got embarrassed when they brought Facebook. Oh, is that an app? What is an app? You can control what everybody says and thinks because Russian influence. The Russian influence on Facebook that manipulated the elections, because that's how smart I am. The guy's a crock. The guy himself. What does he know? This guy needs to be voted out of office in 2020 with the rest of those clowns. So all right, let's move on. So all right, so that's that clown, and then check this one out. Then we have Carolyn Maloney, Maloney Baloney over here. What does she say? This was a quote. I think it was the same article. Hang on. They're pouring their life savings into virtual currencies, and they stand to lose a lot of money when this bubble eventually bursts. Carolyn Maloney Baloney in New York. What the heck does she know? As she sits there on her high horse, with her lack of intelligence as well. What has she done in this space? Who's backing her up? From the big financial institutions. Where does she get her money? How about if we look at that? How about if we build a little bit of transparency into Congress and put every action and reaction and communication, Nader and Baloney over here, I guarantee you that they're taking money from people and they're making decisions based on the lobbying efforts of bigger entities, and that's their decision. I guarantee you that neither one of them understand technology, and I can guarantee you that neither one of them have properly researched a digital asset. Whereas on the other hand, you have people like Darren Soto and many others like Warren Davidson, and the list goes on and on, that do understand digital assets, that have done what's needed. But the Shermanator, the reason why I single him out is because he's on the other side trying to drive negativity and division within Congress. And he's the counterbalance to all the positives within the Financial Services Committee underneath Maxine Waters. He's the one that when he picks up his phone, doesn't know how to text, doesn't know what Facebook is, doesn't know what don't mean to go onto a soapbox here to go through this, but it just drives me crazy. When you see stuff like that, and they, then they're abusing their level of authority. So, oh, Annalise, thanks. You like that? My penguin shirt. got a number of penguin shirts. I thought it was an authentic penguin when I ordered it, but it's just a vintage shirt looking with a penguin on it. So, anyhow, appreciate that. So, meanwhile, BTC has outperformed the stock market over the past 10 years. How do you like that? That's right. XRP, head into the mountains. Awesome. Enjoy the mountains. Enjoy all that. Get some good pictures. Maybe throw some good pictures up. Appreciate that you bounced on here all the way from Santiago, Chile. All right, let's see. Where do we leave off with these guys? So I'm just going through the FUD because, as let's look at their ulterior motive. This was, again, a year ago, and this was on Blockonomy. Oh, blockonomy.com. And here their theory here was that he had substantial conflicts of interest. And this was an article that appeared a year ago where he made numerous comments that we just talked about. And then another comment that he said here, this is the big one. So you connect all this. Here's government thinking they know better than the people. They're trying to attack it, but what's their ulterior motive? And they're abusing their position of power really to undermine and spread more misinformation because they don't take the time to educate themselves. But here, cryptocurrency accomplishes nothing except facilitating terrorism, narcotics, and tax evasion. The last time I looked, there are multiple members of Congress that have done a very good job of tax evasion without digital asset. The last I looked, let's see, Obama transferred $150 billion in cash to Iran on a pallet. And I see lots of other fiat currency that's gone on way before 2010 that have facilitated the support of terrorism and narcotics. So wait a minute. So it looks like we should really ban fiat currency because fiat currency isn't trackable. Fiat currency payments aren't transparent. And really, there's no mechanism in place, especially when it goes to the abuse that we see within government. So wait a minute, maybe we should really look into this thing. Maybe the Shermanator is right, but he's right in the wrong way. So, what time is it? Oh man, it's on the hour, and I still got a few more things to talk about here. Michael Metzner, what's wrong with narcotics and tax evasion? We got to pump the Yeti coin. It's going to be YTC if that isn't taken, right? It's Yeti coin. It's going to be it hasn't come out yet, but Yeti, what is it? Yeticoin.io or something like that. Don't buy the domain. Don't buy the domain. So C130 is full of cash, just pushing them out. Push it out with a parachute. Let's see. Oh, this was 3 months ago. I don't know how we missed this. Oh, no. 2018. I pulled this article up. Let's see. This was on News BTC. I like trying to pull things that kind of, go along with the theme of the conversation. Ban the bank. You remember? So, hang on. Where was this one? The U.S.-based bank and financial services clarified in its 2018 bank deposit agreement that it reserved the right to return or decline to pay for items related to decentralized, non-fiat virtual currencies, cryptocurrency, or another digital currency or money that relies on distributed ledger or blockchain. Oh, that was Regions Bank, which was barring customers from purchasing cryptocurrencies. Now, I can understand if they want people, that they're going to bar people from buying cryptocurrency using a credit card, because there's a higher probability of default on that credit card. If people are going to max out credit cards to buy Bitcoin or another digital asset, I completely understand that aspect of it. If you want to do an ACH, now, people need to be held to account if they are using their credit card for that. But again, if it's your money, it's in your account, the bank itself cannot block you from connecting or paying or using your bank account through an ACH, transferring your money over to an exchange. Again, they might be able to block the credit card use, but not the ACH use. So too late, I maxed them on XRP. Nice. Too late, Regions Bank. Too late for you. But here it says, Regions Bank blocked all kinds of deposit holders, account holders, be it savings or current, from accessing cryptocurrency markets. I believe that was overturned. I don't think that lasted too long. And I don't know. I'm not sure what the outcome of this was. This was recent. Wait a minute. This was March of 2019. This is their statement. So if they haven't overturned it, then the best thing to do is just don't use Regions Bank. Ban the bank. Forget it. You want to do that? We're not going to use your bank anymore. There's a lot of other options out there as we speak. And this goes back to, again, this is just FUD. This is just, misinformation. This is just, banks trying to hold on to their last, remnants of control and power. But at the same time, what we need to focus on is the blending of the digital asset exchanges with banks. And we're already seeing that migration and movement where we're starting to see digital asset exchanges. You see, like what Sum is doing, the ZUMM by I can never pronounce his name, Witsy Wind, or let's call him the founder of XRP Tipbot. Through Zum, what Zum is doing, where they're applying for banking rights, banking license. You get the banking license into the digital asset space. This is what they're terrified of. This is what Congress is terrified of when it comes to Facebook. Facebook, with the amount of money that they have, and they create, which they've created, they roll out LibraCoin. When they roll out LibraCoin, they're going to inject a huge amount of money into that company, into that part of their business. Now, with the amount of money that Facebook has, and this is what I think terrifies the central banks, is they can easily start buying up banks. It's not a matter of we have to apply for a license. It's a matter of, we need to start buying up banks. You start buying up the smaller banks, and if you have, whatever this new entity is that Facebook creates under, whether it's straight Facebook, I'm sure that their payment component will be under a new LLC. Not 100% sure. We have to look into that. But either way, they can easily start buying up banks. They then have the bank license. They make that acquisition. There's nothing that can hold them back at that point. But we're already seeing the amount of money that Coinbase has, that Gemini has, and Gemini's starting to pay interest on accounts. Binance is going to have a component where they can pay interest on accounts. Uphold has a component where they'll pay interest on accounts working with another entity. The only element that is still an unknown variable is having FDIC insured coverage on the money that you hold on these exchanges. Now, I have no issue putting my money into a Coinbase, putting my dollars into a Coinbase account if it is FDIC insured. If it's not FDIC insured, I'm not putting my dollars in there to hold my money. I don't care what percentage they return. It's high risk because if they shut down, there go all your money. There goes all your dollars too. So you have to, look at that, and really weigh those benefits, and that's why we focus in on it. But sorry to digress from what we're talking about. So now, there's just so many different statements, as I went down. I'm just going through. Here's the one that I wanted to find because Warren Buffett was brought up earlier. And this was back in February. Warren Buffett said, and this was on CNBC, again, using the name, abusing the power. Warren Buffett says, Bitcoin is a delusion and attracts charlatans. So if it attracts charlatans, and apparently I'm a charlatan, and so are all of you guys. You're all charlatans. Don't deny it. Don't deny it. I know you're a charlatan. So we're all charlatans, according to Warren Buffett. And so he goes on. He sees no unique value in the world's largest cryptocurrency. Just looking at some of these snippets of comment here. It's a delusion, basically. He tells CNBC's Becky Quick. So the question is, whether does he understand it? Is he spreading FUD? What's his ulterior motive? Which banks does he own? Which organizations and entities does he own? Which organizations and entities are in conflict or in competition with exchanges or digital assets? Has he bought enough? Is he attempting to change the dynamics of everything? What exactly is happening? And so do we really know, from that perspective? Then, we don't know what all of his holdings are. You can look down through every one of them and try to make a determination. But what I like, and this is what all of them do, every one of them goes back into that narrow focus. Instead of looking at the bigger picture, let's go back to 2010 and look at the direction that digital asset as a technology has developed on the blockchain. What has happened over the past 10 years? Nope. What they all do, every one of them, we saw it with the FCA, we've seen it with Jamie Dimon, we saw it with Kevin O'Leary, we've seen it with all the different banks, we see it now with Warren Buffett. What is his statement? Here it is right here. Here's what he says. He said he's sympathetic to optimists who bought the world's largest crypto in hope it would change their lives. Then he focuses on what happened at the height. So he says, Bitcoin has lost more than 80% of its value since reaching a high near 20,000 at the end of 2017. The cryptocurrency was trading near 3,700 on Monday. This is an older article. So then that's when he went on to say it attracts charlatans. If you do something phony by going out and selling yo-yos or something, there's no money in it. But when you get into Wall Street, there's huge money. Of course, there's huge money. Yes, there was huge money there's definitely huge money in it. Here we go. I like this. Warren Buffett also missed out on the internet. Boom. Based on his arcane thinking. Exactly. I don't believe he invested in Google. I don't believe he invested in Amazon. I believe he spoke out against all of them. I don't believe he invested initially in the FANG stocks, in Facebook, Amazon, Netflix, Google. I think he was at Facebook. Yeah, Facebook, Amazon. No, FANG is, Facebook, Amazon, Netflix, and Google, I think, are the FANG stocks. I think he missed out on that. He bought Coca-Cola. He bought he definitely bought the big ones. And that's just where he emphasized, so no money in yo-yos. Yeah. He was around. Yo-yos made a ton of money, and yo-yos were awesome too. I don't understand where he missed out on the yo-yos, but he liked just the big name stocks. And again, the guy did amazing. The guy's a billionaire. He owns a ton of stuff. You can't take that away from him. But the point is, with all of this, is that these are individuals that have put themselves in this huge position of power, which is where they are. Now they come out and speak about something they aren't necessarily fully educated on, and yet they want to voice their opinion on something they don't necessarily understand. That's what is difficult to fathom. Now, if Warren Buffett would say, hey, you know what? I got the best team of people together. We dug in. I got technologists. I got economists. I got attorneys. We dug into this thing, and here's what we found. Here's my discovery. A, B, C, D, E, and here's why I believe that digital assets and Bitcoin isn't what it is stated as. Here's why I don't believe in it. Nope, he didn't do that. Jamie Dimon didn't do that. None of them have done that. None of them have gone back and said, here's my group of experts, and here's what we came up with. Each and every one of these guys based it on their own credibility, their own laurels. They came out and said, based on who I am and my reputation in this industry, I'm now going to speak out against it, regardless of understanding or not. And that, to me, is the biggest issue with it, because who's the charlatan at that point? The charlatan is he who is speaking about a topic with zero understanding in the topic, and so that's the problem. Now, could he be 100% accurate? You know, I mean, there's always that off chance, you know, but why is it that the entire world is now beginning to embrace blockchain technology and seeing it for what it is and understanding the dynamics of the significance of not just the blockchain, but the transparency and the ease of which you can transfer finances during those transactions. And there's just so much more, you know, so it's getting ready to really blow up. Now, this is interesting too. So, let's see, let's drill down one more. And I want to get over to regulation because it's important. I don't want to run out of time here. Let's see. Okay, here's another one. This was in May. This was on markets. This is from Business Insider. And so do they really understand? Now here, traders are piling into Bitcoin as a haven against volatile markets. The markets are volatile. Economies are reeling all over the world. France is about to issue negative interest rates on a bond, meaning that people have to pay to hold the bond. And it's a small percentage, but you need to pay for it. This researcher warns they could get burned. So there's a researcher, let me see. Bitcoin isn't a unique hedge as it's vulnerable to the same market risks as conventional investments. That's a new study. They voiced the study. Who was involved in the study? The findings are a cautionary note for investors, writes Dimitrios Koutmos, as they suggest Bitcoin isn't a unique asset class whose price behavior is detached from economic fundamentals. Okay, so it's interesting. Now they get into the trade wars. They talk about volatility in the markets. You know, they're talking about all sorts of different things. And so it's just, you know, you look at what they did to build themselves up. You know, but again, it's just they're looking at the current overinflated markets or whatever it might be. You know, they're looking at, you know, fundamentals, you know, that have led to economic issue within these different countries, and then they're trying to apply the digital asset phenomenon, the Bitcoin phenomena, to all of that, and, you know, trying to identify if it really is the solution to move money into and out of a volatile marketplace, you know. And so, you know, this guy actually did some research on it. You know, you'd have to dig in. I just think it's interesting because these are the kind of articles that keep popping up, you know, on like Business Insider and others. And then, okay, we're going to end with this one later. First, we're going to get into regulation. I'm just going down some of the things that I pulled up here that were interesting. And this one is, what is this? Oh, shoot. I'm going to have to exit out of that one. Okay, that was not too bad. Too bad. All right, so now let's back up here. Let's go back. So that's the FUD. You know, let me see what you guys are commenting on here, and then we're going to get into regulation. Sorry, I dragged this out. Anyone who was logging in that wanted to see regulation in the beginning had to wait a while. Alex Yeet, what's up, man? Good to see you on. Gaming crypto, I don't know about the other billionaires. I'll have to look into them. I just see the ones that are outspoken. I didn't really dig into each individual one. They haven't been really outspoken and really using or abusing their position of power to voice an opinion like Kevin O'Leary did. So we should sell our crypto and invest in avocados. Is there a shortage of avocados? Are we talking about a new trend of guacamole? Avocados are really good though. Forbes full of FUD this year. Also, the trend, you know, Mike G. So Annalise George loves avocados. Everybody loves avocados. Mark Cuban owns some crypto. The question is, does he own avocados? Big question is, how many of them are going to own Yeti coin? That's the question. Let's see, Allison here. Yeah, I feel Buffett is the poster child. I still fear to shake the weak hands away from this inevitable disruption. You know, that's it. They're trying to, you know, instill fear. Yes, to instill fear, to shake the weak hands, you know, out of this and create an inevitable disruption. You know, that's there's definitely a huge power struggle going on, and that's what's really interesting. You know, that is, you know, what is, you know, amazing is this power struggle. and they're going to try to hold on, but it's almost too late. And that's why they're terrified of what Facebook is doing, because Facebook is going to put it out there where it brings it to Main Street so fast. You know, what is it, 1.3, 1.4 billion users a day. Active users, they have 2.6 active users, 2.6 billion active users per month. It's amazing. Now you roll out the Libra coin to them. You know, whatever we believe or don't believe in the Libra coin doesn't matter. It's the fact that it's going to go Main Street, and that's what's important. And that's what's terrifying these guys, you know. So it's interesting. You look at it, you got to put it in perspective. I mean, I don't mind. Hey, if one of these guys comes out, just like any of us, you know, we're doing our research, we're looking into it. You know, any of these guys out there, if Warren Buffett or Jamie Dimon, they want to make their case instead of just saying it's a fraud. Build your case and let me know how many experts you put on the case to look into it before you speak out. Then the thing is, like with Jamie Dimon and JP Morgan, then they roll out their own blockchain, their JPM for the payment space. So obviously it's full of crap, you know. That's all there is to it. Now into regulation. So let me I'm gonna highlight this one. This was on nextgov.com. I think this was interesting. Hang on a second. No, I wasn't sharing. Let's see if I can even share my screen here. I want you guys to see this one. Let me just transition.